Hello and welcome to Nirmal, ladies and gentlemen. I'm Nirmal. We have with us Kunal Shah, Head of Commodities Research, joining in. Kunal, with what's happening with regards to where the India-China trade war, not the trade war between India and China on the border, and if you talk about the trade war with regards to US as well as China, how do you see base metals from here on?
Yeah, so I'm starting from where I left on last Monday. So basically, markets are stuck in a two dilemma. On one side, there is so much liquidity which is coming in, and when I look at the liquidity, I feel like how can I go short and expect prices to crash? So my view on that is that even if there is so much liquidity right now coming in, but fundamentals will always play their role. And for example, already metal prices have already shot up. So I believe that with the new cases shooting up in Beijing, so in Beijing, the number of cases shot up by 100.
Correct.
What is Beijing to China? Like Beijing is basically Mumbai and Delhi of China. Shanghai and Beijing are Mumbai and Delhi of China. So if there are problems happening over Beijing, that's not that's not to be taken lightly. So if the number of cases surges and if the number of fatalities move up in Beijing, then I think it is sentimentally very negative for base metals. So in this kind of scenario, how to trade base metals? So you have to be a swing trader in order to capitalize on the moves. So for example, copper is trading at 441, 442 right now. 444, 445, I think is a selling zone. 435, 436 is a buying zone. If you ask me what we need to do for the evening session, my view is around 440, 41, you can go short in copper. Expect prices to decline and test levels of 435 in the evening session. And as far as the stop loss is concerned, one should keep a strict stop loss of 444. So I think the markets are going to be very tight, but I will not just look at the liquidity and blindly buy metals, because already metals have run up so much. So looking at the problem in China means not a good sign for metals. So I'm recommending sell on rallies in most of the metals for the evening session, and perhaps continuing tomorrow also, because I don't think so this prices can sustain with the outbreak in Beijing. So if you are going short, please keep a strict stop loss, because my view can get wrong if the again, if Dow Jones moves up by 1,000 points during evening session, then I think the entire view can toss. So take a stop loss. I will not be diplomatic in giving view. My view is to go short. 436 to 434 is the level what I'm expecting.
But with this, Kunal, how important will it be to look at what's happening with the US dollar as well? And any movement on that front is something which could be impacting the prices.
So what I'm basically going to share right now is important for everyone, not just from the tracking commodity point of view. US Federal Reserve has already expanded their balance sheet from $3.8 trillion to $7.3 trillion. Number one. Number two, they have announced last Monday that they are going to buy the corporate debt. So that is one way of stimulating the economy, because if corporates are facing problem, if the central banks is buying their debt, then corporates will definitely find it easy to run the business operations, even if there is a outbreak of COVID. Another thing is that US is directly handing over cash, sending cash to the US citizens. So this kind of scenario, we have not seen this kind of monetary printing. So what does it mean for the US currency? It means in the longer run, dollar is eventually going to depreciate quite sharply. So already dollar index is down from 100 to 96.50, but I'm expecting that in next 1 year it will be somewhere at 90 or perhaps much lower than 90. So the trend for dollar index is definitely weak. And what does it mean for you? Why you should be bothered? We all should be bothered, because the money which we save, which we earn, that is rapidly going to lose its value. The way the central banks are printing currency, it means that if there is a problem, they are printing not half a billion, 1 trillion. They are printing $9 trillion. They've printed $9 trillion. So it's not a good sign for the savers. The interest rates in India, in across the emerging markets, everywhere are going to go down. We are not going to get good return on our saving accounts, fixed deposits. So eventually, more and more people will have to uh, invest in money in the stock market or in the other market, mutual fund industry. So I think people are not going to get a lot of options going forward, and I think uh, one should, this kind of development means the dollar index is definitely going to weaken.
Right. And with this, Kunal, what's the sense that you have with regards to where crude oil is concerned? Because we've started off the week pretty much in a seesaw fashion, with headwinds and tailwinds that have been battling for control. Uh, a spike with regards to COVID-19 infections, that's something that we have been monitoring on one hand. Apart from that, there is again that optimism that's returning as well. So that's where we are stuck in that battle with regards to crude. Do you think this volatility is something which is expected to continue for the next few days?
Yes, I think this volatility is likely to continue, and I think crude oil prices are vulnerable for the correction. But at the same time, like I said, it is a tug of war between the weak
Mm,
fundamentals and the extreme liquidity. So yesterday we had the API inventory, which showed a major build in crude oil stocks. So I assume that that kind of inventory, if in today's inventory report comes up, then I think that will trigger selling in crude oil. So I
mm,
would recommend to go short in crude oil at 29.10, 29.20. Strict stop loss of 29.60 should be placed, and expect oil prices to decline and test levels of 28.20 to 28.10. So I'm expecting that during evening session, the likelihood of crude going down is little higher, considering the fact that there is going to be a build in the US inventory, which we saw yesterday.
mm,
But I'm not expecting a flash crash. So what is why I'm not expecting crash is that there is a big shale oil producer called Chesapeake Energy. So they are on the verge of filing bankruptcy. So more and more shale oil companies are filing for bankruptcy or going busted. So eventually, that is going to lead to a drop in production of US crude oil, and I think that is definitely going to prevent any major crash like what we saw 2 months back. So not expecting crash, just a profit taking or selling what we can see after inventory. So always I believe in giving a clear view. So my clear view is go sell, and please in this kind of volatility trade with the strict stop losses.
right. So with this, then how are you looking at gold as well as silver? Because again, there was a point in time where we were thinking that people are moving away to riskier assets, and that's the reason why we are seeing some bit of profit booking that's coming in with regards to gold. But now with that uncertainty which is looming with regards to COVID cases, do you think people could return back to gold right now? And there is a possibility where we could see a good up move?
Uh, See, gold, the fundamentals long term are definitely bullish, but I'm again saying clearly near term, I'm not expecting it to shoot up. So the why I'm expecting that, why gold is not going to move up in near term? Three
Hmm.
reasons. Number one, the
Hmm.
central bank buying, which was 700 tons in the year 2019, this year that is not going to be more than 350 to
Hmm.
400 tons. So we are going to see a significant loss of demand from the central banks also, which is the key driver of gold demand. Second, ETF buying is the only buying right now which is making up for the loss of jewelry demand. And also, so once the trend is that when gold prices are moving up, the ETF people start buying ETF, and vice versa. When you see a correction, people will start to get rid of them. They'll start booking profits. But here in gold, now everyone knows that we are not going to see gold going down by 200 $300. So small corrections are going to come in gold. So right now, this is also very important reason that only ETF guys, if the incremental demand growth of ETF,
Hmm.
if ETF guys are buying more and more, then I think gold prices के लिए बहुत bullish हो सकता है. But apart from that, I'm not expecting a So I'm 300, one can go short. 46,800, one can cover that short, and please keep a stop loss of 47,540.
Right. In fact, Kunal, there's a question coming in with regards to where silver is concerned. Uh, basically, Shirish is asking that the last 2 days silver has been pretty much range bound. So, what would you advise, and what are you doing with silver right now?
Yeah. So if you ask me silver fundamentals, so I'll say fundamental of gold and silver both looks bullish. So we have seen disruption taking place in gold, silver secondary mines, mainly zinc and lead mines. So
Mhm.
because of that, silver looks attractive from the supply side also. The supply side has witnessed at least 4 to 5% of downside globally. So silver, why it is range bound? It is range bound because markets are lacking trigger. So yesterday we saw retail sales data of US, which was very bearish for gold and silver, but we saw a dip and again prices moved up. So right now, I think it's a tug of war between so much money which is pumped in and weak fundamentals. So the time will tell us who's going to win. But on one hand, looking at the weak fundamentals, I would not say there will be a crash in gold and silver. There will be small correction only. And even if you are going short in silver or gold, please put a strict stop loss because the trend is definitely positive, longer term trend. So in case some very bullish news comes up or some geopolitical conflict starts or anything like that, that can lead to a smart up move in gold futures. But right now, like I mentioned,
Mhm.
central bank buying and weaker retail and jewelry demand should not help gold to shoot up immediately. But eventually, it is going to shoot up test 2,100, $2,200 in next 1 or 2 years. So for the time being, yes, selling on rise for the traders is recommended.
Right. So, sell on rise is something that you recommend from your on. Another question coming in, Kunal, is whether one can sell nickel from the current market price.
Yeah. So nickel fundamentals, nothing spectacular. We've already seen nickel prices moving up from 850 to 900, 900, 950, and right now they are trading at around 985. So maximum on the upside 995 to 1,000 rupees. Not expecting it to sharply rebound from there. And on the downside, 960 to 955. These are the levels, but what you can expect. Please cover your shorts around those levels because I'm not expecting there will be a crash for the same reason I mentioned. So much liquidity. So just corrections can come, but not expecting crash.
Okay. With that, another question coming in is with regards to what is the level for natural gas that someone should look at with regards to buying. Last 1 week, natural gas has been on a weak trend. Is it the right time to buy natural gas?
Yeah, so there are two questions by Mohammad Yamin and Shirish Nanware. I think the other question is also in line with that. Crude oil is going up, but why natural gas is going down? So basically, what has happened with the natural gas is the because of the lockdown and because of the industrial activity remain muted in the US because this contract is basically the US contract. The demand has taken a hit of 20-25%. And on other hand, where we've seen a drop in oil production leading to some bit of drop in production of gas, but the inventory level of gas are very high, and this is the weakest period for the demand of natural gas. This is a slack season. So after winter is over, this is not the season where you see a sharp upsurge in demand of natural gas. So it looks very tempting, natural gas was trading at 160 and right now trading at 125. Let us go and buy. But that is a catch. You don't buy. I've seen times where natural gas prices have gone to even double digit numbers. And the fall was also aggressive because this is unlike metals, gold, silver, this is a gas. And when there is a problem of the demand in gas, I think there is no option, for producers or consumers. You can store gold or copper, when the prices declines, but that is not the theory with the gas. So you have to
Mhm.
convert the gas into LNG, and then you have to store the LNG, and then you have to reconvert LNG to gas, and then you have to sell. It's very costly process. So understand gas still looks weak. I'm not expecting gas to move up. 120, 118. I know these are the bottom levels, but the bottom can be much deeper also. Don't buy, remain on the short side, because I get these questions. I at least from yesterday and today, I got this question 4 to 5 times. I got a lot of call yesterday for natural gas because everyone wants to buy. It's available at these prices. So price level is attractive, but the fundamentals are not.
Right, so price level is attractive. Fundamentals are not. This could be a trap. That's what we need to watch out for with regards to where natural gas goes. Kunal, another one is with regards to where gold is concerned. Uh, Piyush is asking whether one should short gold at 42,000 and can he average it? If so, at what levels?
First of all, I think Piyush from Gujarat, I think Surat, Piyush from Surat. Piyush, I think 42,000 was never a level to go short in gold. But if you ask me, if you short gold right now, the maximum downside is still 45,000. So I'm not expecting gold to go below 45,000. On Comex, I don't go expect it to go below $1,650. So the downside is not even 2,000. So you can sell it, but please keep a strict stop loss. Because gold can really any negative sentiment from the geopolitical front, and gold can give big spurt. So my recommendation is keep a strict stop loss around 47,650 to 700, and then you can short. But I don't expect gold to test 42,000.
Right, so that's with regards to where gold goes. Another question coming in is yesterday's evening session, we did see a downfall with regards to copper and all the metals. Why has nickel not moved as per the other metals then?
Yeah, so nickel is nickel. So I tell you which are the metals who are fundamentally production cuts is very high. So Vale, one of the major refiners for iron ore, has basically stated that because of the COVID-19 worsening scenario in Brazil, they shut down the all most of the production. Similar thing is happening in Indonesia. So they have basically because of the COVID-19 crisis. So what is happening is that they are not supplying enough materials. So markets are getting shortage. Markets are not able to digest that or able to get that stock. So because of the production cut or the low shipment number of shipment coming from Indonesia, Philippines to China, the physical market remains pretty tight with nickel. And if you look at this metal, the demand and supply side, right now there is a loss of demand. But what happens after lockdown is the pent up demand. So the main demand is from, it comes from the new generation of demand from electronic cars. So I think once the auto production in China, if you look at the data, it has recovered V-shaped recovery what we've seen in auto production. So that's the reason why nickel prices are not basically going down when the other metal goes down. And that's why I recommended 15-20 rupees downside maximum, not more than that. We can see in that.
Right. So that's with regards to where nickel is concerned. In fact, any other questions we're happy to take. We've answered something with regards to where nickel is concerned, copper. Apart from that, gold, silver, crude, and natural gas. These are a few of the other commodities as well that have been covered on this call. So thank you, Kunal. Thank you for joining in. Thank you all the attendees as well. We will come back to you with Kunal Shah day after tomorrow as well. Thank you very much.